The world is changing, and so is real estate. It's changing in a way that gives consumers more control, a better use of technology, and guaranteed savings. Hi, this is Joe Kuchera with Real Estate Radio Live. I've been on the air and in the media educating and informing consumers for over 7 years now. I'm excited to introduce Bundle Select, which allows consumers to bundle all of their real estate services online, simplifying the process while averaging a savings of 20% or more. That's right, Bundle Select helps buyers and sellers streamline real estate, lending, and title. In addition, our concierge service will coordinate the entire transaction for you, so you benefit by working with the same team, saving time and saving money. You'll not only be working with the most qualified, hand-picked experts, but you will also save a significant amount of money in all three services as well. Act now and take advantage of this opportunity in the Bay Area. Go to bundleselect.com. That's bundleselect.com. Again, bundleselect.com.
Real estate broker Cal BRE 004666902. Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Kuchera.
Welcome in, Joe Kuchera with Real Estate Radio Live as we kick off the new week, post-Super Bowl. Here we go. We are on our way after the Super Bowl, and supposedly in the real estate industry, everything starts happening after the Super Bowl. So let's see what happens. Just a reminder before we get underway on our topic today to follow us. A lot of new announcements coming in. This 2018 is going to be filled with exciting new news and developments, and really a lot of new developments for the consumer, for the industry, and we're really excited here at Real Estate Radio Live to continue making these announcements. Stay tuned, and we will continue to make more and more latter part of this week and going into next week. Just a reminder, for more information, you can always go to RERadiolive.com. That's RERadiolive.com. Make sure to download the podcast. You could do that by going to iTunes. Just type in Real Estate Radio Live, or go to our website, Real Estate Radio Live, or anywhere on Google search. Anything, you just enter this information, my name, Real Estate Radio Live. It'll come up. Download the podcast. Be sure to have it handy on your desktop, on your mobile device, wherever you can, because we are going to continue to provide you with the maximum amount of education and information. In 2018 will be a blockbuster year with a lot of new announcements, and it really all is in an effort to continue to add more value to you, the consumer, in and around real estate. Focus, purely simple. During the week, if you want to reach me, you could do that by dialing 408 or texting 838-9060. If you want to reach me during the week, anytime, that's the place to reach me. Or you could simply email Joe at RERadiolive.com. That's Joe at RERadiolive.com. Also, just to get you updated on our ongoing series, we're going to have a legal segment. We're going to try to do this at least every week or so, depending on Jack Russo's schedule. We had him on last week. He was a huge hit. Jack was the show that we did last week on entrepreneurship in the Silicon Valley was one of the top-rated podcasts in a long time on our show. And the reason why is because people are very, very interested in the legal aspects, one thing. We're going to talk about legal aspects of real estate to some extent, but we're also going to talk mostly about entrepreneurship, startups in the Silicon Valley, how are things affecting the marketplace, how do startups affect the real estate industry. If you are a startup yourself, or maybe you're thinking about a startup, Jack is the person that navigates. He and his firm help navigate as well. So excited and really, really looking forward to ongoing series, the legal division or legal area here of Real Estate Radio Live. We're going to have Jack on, if we can, every couple of weeks based on his schedule. And the best place to do, if you visit the website or download the podcast, you get those updates as well. All right, the topic today is going to be this crazy market. How will this decline or this downturn in the stock market, how will this affect interest rates? And I'm going to talk a little bit about how it's going to affect it, temporarily, how it's going to affect it immediately right now, and then how I think it's going to affect it long term. When I say long term, over the next several weeks and then going in to the next several months. So today, a little bit about interest rates, how they're affected by the downturn in the stock market. And then the second segment, I'm going to talk more so about, what do you do? Should you wait? Should you hesitate? Should you hold off? Should you act now? I'm going to give you some ideas just to hopefully relieve some of that anxiety some of you may be having in terms of whether you should pull the trigger now on that refinance, or what about a purchase? What should you be doing on a purchase? So I'm going to talk a little bit about that more in the second segment as well. All right, quick review of the market. Most of you have seen the stock market. I'm not sure where it finished today, but it was down at one point, I think 1,500 points. Last I saw was down 4% roughly, so that's a little over 1,000, I think, roughly. I don't know where it finished up. I'm doing this show a couple hours after the stock market closes, or a little less than that. So there is adjustment going on. Why is it going on? I don't know. I mean, there's a lot of speculation, and you're going to get opinions from everybody, and there could be a little bit different in those opinions on how they're shaped and how they're put together. I think there's a combination of things. I think there's a fear, some inflation also. There's also the issue of, I think the Fed has put the stake in the ground and said, we're raising interest rates. I don't care what's going on in the economy now. Those rates are going up. I think there's some issues around that. And then also I think the market's just taking a breather. There's been this huge run-up, that most of us know, in the stock market. I'm not a financial expert. I do work with a lot of financial experts. I do work with a lot of financial planners. I get feedback from them on a regular basis. I have some of them on my show on a regular basis. So I'm fortunate that I'm around and surrounded by a lot of experts that work with the markets. And their overall take on this is a couple of things that I just mentioned. And I think that's true. It's hard to say exactly why it's taking place, but I do feel like it's a combination. One, some inflationary concerns. Two, you have the thought that interest rates are going to go up. What is that going to do to the market? Does it spook the market in the sense that the cost of money is going to be higher? Is that going to slow people down? Is that going to slow jobs down? And then, of course, the third factor is the market's probably overdone a bit, probably needs a breather. And that could be a combination or an element of all three of those things. So we'll have to wait and see. So let's talk specifically what I think it's going to do to the interest rates. Interesting dynamic. Over the last few weeks, or the last several days, or whatever it is, when you typically, if we look at this historically, what happens is anytime the market rate suffers, I should say the stock market suffers or has a decline or a setback, historically you can look at that and almost lockstep what happens is anytime the stock market suffers or has a setback, that usually triggers an improvement in interest rates. Historically, you could look at that dynamic, and that's what happens. You have a setback in the market. There's a reason why the market is suffering. You have a downturn. What happens is that money competes with more conservative money. In some of that cases, that's bonds. What happens, the bonds rally a little bit, and then what you have is the bond market rallying, which gives us lower interest rates, and there you have it. Now, that's historically what has happened over the last 10 years or so. Not 100% guarantee, but mostly if you look at the history and the charts, that's what happens. What's been an interesting dynamic here the last couple of weeks, and certainly the last couple of days, when the stock market took the biggest hits in recent history in the last couple of days, interest rates have went up too. It was crazy. Most people would say, what's going on, Joe? I don't get it. Stock market suffering, rates should be better. I get, that's historically speaking, that typically happens, but it's not. So first of all, why is that? So why, with the stock market taking a hit, why do we have interest rates increasing at the same time? So a lot of people are scratching their head trying to figure it out, especially in our industry, because that would usually message the different. That would be 100% different. Well, again, I would say that overall the reason for that is because we are in a different market environment right now. What I mean by that is most of us know that we're done with historically low interest rates. Unless something happens we don't know about, we are finished, we are done. Over the last 7 to 10 years, there's been this ratcheting down of interest rates, and everybody has benefited from them, which is great. And everybody would, well, it's all right, rates are up a little bit, give it some time, and they'll come back down. That's not going to be the case anymore, I don't think. So you have a market that's already have this built in, and I think so what's happening on the interest rate side, even with the stock market suffering here the last couple of days, you would think rates would rally. They have done the opposite, and they have gone up big time. We saw interest rates increase 3/8 to a half, 50 basis points in the last week or so. That is a huge move. But if you've been following this show for a long time, and I hope you have, if you haven't, please continue. You've heard me say before, when rates go up, they go up fast. When they come down, they come down slow. So be careful with this. So what we've seen is this huge jump in interest rates the last couple of days. And, unfortunately, if you were a person that were just getting ready to refinance or you're in the market for a purchase, I'm going to talk a little bit about that on the other side, the second side of this segment, because I want to calm your fears a little bit about some of the decisions you may or may not make based on what the market's doing. Because there is a certain component of, yes, keep an eye on the market. You should have an understanding of what the market's doing. Yes, you should educate yourself, try to figure out what is potentially happening in the market, but your entire life shouldn't be driven by it. It should be driven by the decisions that help you and your family and the best decisions you make for you financially. And sometimes make every decision based on what's going on in the marketplace for sure. So I'm going to talk a little bit more about that in the second segment. So as these rates have gone up the last week or so, I mean, they have really jumped up. So there's a couple things to notice, and I want to talk about a couple things specifically to help you with this, as a guide you through this decision-making process if you're in that mode. So the 30-year money has made the biggest adjustment here. And what I mean by that is if you look at 30-year interest rates, the conforming jumbo 30-year interest rates, they've really gone up in the last several days. But if you take a close look at the ARMs, the adjustable rate mortgages, a lot of people, if you're familiar with those, they refer to as the 5-1, the 7-1, the 10-1. If you look at those rates, they've not made much change at all. There has not been much change at all to the ARMs, the adjustable mortgage rates. And someone might be saying, well, why is that? What's going on here? Again, this is very typical. In a market like this where the rates start going up, what happens is you have a very aggressive move on the 30-year money, and then typically the ARMs will lag behind. So you will not have, I shouldn't say, for the most part, if you look at this historically, all of a sudden I just told you the 30-year fixed went up for 3/8 to a half, so maybe in rate, where we were having interest rates in the, right around 4% on the 30-year money. Now they came close to 4.5%, and they were about 4.5% or so. That's a big move. And again, a lot of this will depend on your credit score and your ability to loan and your income and assets and all that. I just need to make sure I have a little disclosure there. When I talk about these rates, I use them as examples. I don't use them that they are the living, breathing rate at this very moment. So what's happened is, keep an eye on the adjustable rate mortgages, the ARMs. I am going to suggest for you out there listening to this podcast, if you're in a situation where you need to refinance for some reason, let's say you need cash out, or you're doing a remodel, or something's going on where you have to do this, or you're really strongly considering a move, but you're concerned about the interest rate, whoever you're working with, and I'm happy, call me, I'll walk you through this. Talk about the adjustable interest rates. And some of you are listening to this going, Joe, I'm totally against the adjustable interest rates. I don't like the idea of using these. I don't like the idea of having these. They make me nervous. And I understand that. So I think part of people's apprehension and fear of the adjustable interest rates is they're not educated on them enough, and they're not informed on them enough. I'm not saying I want to talk you into using one or getting into one, but I think if we did continual classes and education information on adjustable mortgage rates, people would feel a lot better about them when they're more informed and educated on them. All right, here's what I'm going to do. I'm going to take a quick break, and I'm going to come back. I'm going to continue talking about interest rates, how they're going to affect the market, what you should do. On the second segment, I'm going to spend more time specifically on those out there getting ready for a purchase, or maybe you're thinking about a refinance and you're just scratching your head wondering, should I do this now? Should I pull the trigger, or should I wait? Come on back, and I'll continue that conversation and talk more about it. This is Joe Kuchera with Real Estate Radio Live. Again, I'm going to take a quick break. Those on Facebook, stick with us. I'll be back with you to continue the show in a minute.
For more information on today's program, visit reradiolive.com. That's reradiolive.com.
Is there a real estate bubble in the Bay Area? No, but there is now a real estate bundle in the Bay Area. That's right, Bundle Select. Hi, this is Joe Kuchera with Real Estate Radio Live. I've been on the air and in the media educating and informing consumers for over 7 years now. I'm excited to introduce Bundle Select, which allows consumers to bundle all of their real estate services online, simplifying the process while averaging a savings of 20% or more. That's right, Bundle Select helps buyers and sellers streamline real estate, lending, and title. In addition, our concierge service will coordinate the entire transaction for you, so you benefit by working with the same team, saving time and saving money. You'll not only be working with the most qualified, hand-picked experts, but you will also save a significant amount of money in all three services as well. Act now and take advantage of this opportunity in the Bay Area. Go to bundleselect.com. That's bundleselect.com. Again, bundleselect.com.
Real estate broker Cal BRE 004666902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit reradiolive.com. That's reradiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. Just a quick break, as we always do. For those following us on Facebook, thank you very much. We're getting some comments. I'll be able to respond to those soon. And also, continue to give us feedback, suggestions, thoughts. We're getting feedback. We're getting some suggestions for some new shows, for some different topics. So continue those. Keep those coming. We love your feedback. We love your suggestions and your thoughts. And without you, we would not be anywhere. So thank you all again for your continued participation and for listening to these shows and continuing to make this show a success. Over 7 years now on radio and podcasting, and it continues to grow. We continue to offer more exciting information. And again, I'll keep saying 2018 are going to be more and more new releases of exciting information brought to you by Real Estate Radio Live than we've had in the last several years. I'm excited about that. We're going to have new people on the show. We're going to have different concepts. We're going to introduce programs, information that is going to add extreme value to the real estate market. The consumers are going to be able to have more decisions. The consumers are going to have more and more options as we work, and we work hard every single day to deliver more value to you, the consumer, at Real Estate Radio Live. Today I'm talking about interest rates, the stock market. What kind of effect is that going to have on interest rates, both short-term and long-term? I'll recap just real quickly. The last couple of days, the downturn in the market typically, historically, would indicate rates would be getting better. However, it did just the opposite. Rates got a lot worse. So what do we do now? What's going to happen now? That was an overreaction to the market in the interest rates. I really believe that. I do believe that over the next couple of weeks, no matter what the stock market does, I do believe that we'll get a bit of a breather in the interest rates. I feel that. I really believe that. And what I mean is, are they going to drop super low? No, that's not what I mean. If they went up 0.5% or 50 basis points in the last 3 or 4 days, am I saying, what kind of retreat will we have? I would honestly say we could have a retreat of 1/8 or 1/4 in interest rate. So I think that 50 basis points that we gave up, that went up in rates, we could get half of that back. I do believe that. Could it come back down a full 50 basis points where it was? I don't know. It could, but I'd bet more of my money on about halfway of that. The reason why this is important is I do think there was an overreaction. So for those out there that are either thinking about refinancing or you haven't pulled the trigger yet, and you're working with someone and they're out of desperation, they're saying, lock in. First of all, anyone that calls you with a panic like that, you need to question who you're working with. When you're working with someone in our business, like myself, or someone who treats this like a business and studies it every day, when you start that conversation with a refinance or a purchase, I will have those conversations with you. I'll talk to you about the market, what the expectations are, what are we looking at. The first of the month, the jobs reports comes out. So we want to be careful. If those are expected better job reports, then typically the rates will come up a little bit. If that job report really disappoints the market, sometimes we get better rates. So I will educate the consumers and the clients that I work with on what the expectation of market and rates are. Now, no one is perfect and no one knows this stuff 100%. But you had better be working on it enough to understand it. And what I mean by that is when someone comes to work with me on a refinance or a purchase, I will educate them on this process just enough to let them know when we should lock or if we should float or not. I'll use that term. If someone is in a purchase, for instance, I'll give you an example. If you are in contract and you're going to close in 30 days, you have to be more conservative with this market. You do. You don't have the luxury to wait and float sometimes 2 to 3 weeks. You just don't want to create that anxiety. So if you're in a purchase market right now and you're just getting into contract or you're in the middle of contract, I would be super careful. I would really suggest or recommend that you err on the side of being conservative. What I mean by that is don't get too cute and fancy and try to play the market. I would lock the interest rate as soon as I could because you're working on a short-term lease year. You don't have much time to play with. Now, on the other hand, if you're refinancing, if you just had your paperwork in with me right now, I just had these conversations with a dozen people in the last couple of days. If you have your paperwork in right now and you're just getting started with the refinance, my recommendation right now, and I'm telling clients, let's float for a while. Let's keep an eye on the market because I think it was over-exaggerated. I think that we're gonna see some recovery in the next week or so, and I think we're going to see some initial improvements back in the interest rate market. So if you're refinancing right now or you're thinking about it, here's what I would suggest. Get your paperwork in, work with someone you trust, get it in, have some conversations with this person about what you should do. But if I were you, my suggestion would be to float, and what I mean by float is I wouldn't lock an interest rate right now unless it was a purchase closing in the next couple of weeks. I just wouldn't. I would keep an eye on the market, a close eye, and what I say is finger on the trigger. And we have these mechanisms here where, let's say you want 4.25, and right now the market's 4 3/8 or maybe a little bit higher. I would say if you have the time, wait it out. I do think the rates are going to improve the next couple of weeks. Let's keep an eye on that and see what happens. Now, here's the other thing. Let's say all of a sudden something comes in the marketplace tomorrow or the next day that would suggest that, watch out, rates are going to take another tick up. You better watch out. A, B, and C are coming to the marketplace. Now, if I find that out, I am going to contact my clients and I'm going to discuss with them, hey, listen, I know I told you 3 days ago that we should float, but this is the kind of thing that comes across the market we're not aware of. And I think there's probably a good idea that we should lock the rate right now to fend off the worst. Now, I'm not saying that's going to happen, but this is the type of conversation that you should be having with the person that is helping you manage your mortgage. If the person helping you manage the mortgage can't articulate the market and explain to you what is going on in the market and really what the things you should be aware of and the speed bumps and the concerns, you're not working with the right person. I'm sorry, you're not. You owe it to yourself as a consumer to have the education and the information and to work with the person that is competent, ethical, and it's going to be around for a while. And what I mean by that is there's a lot of people hired in this business and they're paid very little and not much at all, and they burn through them on purpose because they figure they'll just keep churning. And the companies are big enough where they could do that, and their customer service suffers But some people would say, I don't really care. As long as I get the cheapest rate today, Joe, it doesn't matter. And I get that. Some people are going to do that, and that's fine. I mean, there's different ways to approach this. I would say long term, if you plan to do transactions in real estate, find a team of people that you trust, that are reasonable, that are competitive, that will educate you, that will inform you, and really add additional value when you make these big decisions in real estate. So to summarize again, if you're in the market right now for a purchase, I would say don't hesitate. Don't make the mistake and slow down. Some people would say, oh, maybe I should get back on the fence or wait for a while and wait for rates to come down. No. If it's in the Bay Area, do not stop looking. Do not stop getting out there and working hard at finding a place. I'm telling you, don't do it. And here's the reason why. It's too competitive a marketplace, and it's too pricey to wait. Don't do it. I'm telling you right now, yes, there's a little blip on the radar. Rates have went up some. That's fine. Historically speaking, when you think about interest rate in the mid 4%, it is tremendous. I know we've gotten spoiled. We want to see them in the 3s, but it's a tremendous interest rate. If you're out looking for a home, don't stop that search. Don't slow down. Stay out there. Here's what I would tell your real estate agent. Here's what I would tell you the person you're working with a mortgage, that keep your finger on the trigger. Let's go out. Let's keep working. Let's work hard on it, and let's find myself a place. And when you do, keep an eye on the market. Look at the trends. Look at the bond market and look at the trends, and make sure that you're following that trend, whether you're going to lock your interest rate or not. Don't make the mistake of holding off. This is not a market to do that. If I really thought rates were going to come down in a big way, number one, and number two, if I thought there was going to be a ton more inventory coming on the market, I'd say, hey, put your hat on the sidelines and wait for a while. Don't do it. I'm telling you, it is too competitive a marketplace. The inventory is too low. It's going to stay fairly low this year, and rates have a better chance to go up. So the answer to these questions that are coming to me, and I hope I answer to you, do not take a breather if you're concerned about the interest rates going up, and do not take a breather if you think there's going to be a ton more inventory come on the market. It's a mistake. If you want to be in the market and you want to live here and you want to purchase a home, now is the best time to do it. If you go back and listen to some of my past podcasts, you'll hear me say, hold off, wait. It's not a good time. Or you'll hear me say, jump in now. Make that decision. I think it's a good time. I'm telling you right now, it's a very, very competitive, crazy market. Do I like it? What are you going to do about it? Nothing we could do. What you do is adapt. In markets like this, you adapt and you succeed. You adapt and you succeed. You don't sit back for too long and feel sorry for yourself and complain about it. You understand the market, and you adapt and you succeed. And you do that by bringing your customers along with you. The way you do that is stay informed. That's why if you listen to my show on a regular basis, I'll wear out those words about education and information, because I think they're super valuable. And I think it's our job, our industry, it's our job to educate you, the consumers, and provide that benefit to you where when you're making these big decisions, you feel like you're surrounded by a trusted group of people. And when I make a recommendation, I do it because I feel right about it. I do it because I know it's good for you, and I know it's good for the industry. Some people may disagree, and that's fine. I'm not here to agree with everybody. Matter of fact, in some cases, there'll be a fair amount of people that disagree with me, and that's fine too, because I'm more concerned about getting information out to help you, the consumer, make these decisions and make them as well as you can. And that's my number one focus. It's not to be the most popular person. It's not to be the most liked person in the industry. It's, for me, the best compliment I could get, and I get it on a fairly regular basis, is the listeners, the consumers that call and email and text me and say, I love the show because of your guest. I love the show because I learned something. I love the show because you opened my eyes to things I wasn't aware of. Thank you for this. Thank you for that. That's the feedback I want to continue to get. Every day, if I could do my job the best I can, it is providing more and more value and information and education to you, the consumer. Before I close out today, the last thing I want to say about our industry, which we need to get a lot better at, and you've heard me say this before, aren't you, as a consumer, think about this. I want you to take a minute to think about this, whether you're listening to the podcast or you go off later and think about this. How many shows, how many Facebook posts, how much information online, how many TV shows, in other words, of the viewing audience and listening audience, how much true value do you get from these mediums and this media? How much? Think about it. And I'm going to give you some examples before I duck out today. When you listen to a podcast or a TV show or a posting on Facebook, do you feel like you're being sold on something? Or someone's trying to pump up their chest for their own personal gain? Or do you feel like you're being informed with that message? I want to ask you to let that question resonate. Do you, when you listen to a show, when you watch a TV show, I'm talking about real estate-related activities, do you feel that you're learning something, you're being educated, you're being informed? Or do you feel like you're being sold on something and you're watching a self-promotion video or event? I'll give you some examples. Do we really want to hear over and over and over again who the top producers are? And I don't care if it's mortgage or real estate. I don't care what it is. Do you really want to see on a Facebook post or a radio podcast, I was in the top 1% this past year? Well, great. You know what I want to know? I want to know what your customer satisfaction rating is. I want to know what people thought about the way you closed, how quickly you closed, the people you worked with, the team you were assigned to. I want to hear more about customer satisfaction ratings. I want to hear more about that. You as a consumer, we're inundated by commercials, Facebook posts, and everything else bragging about our business. You don't need to hear about who's number one, who's number two, right? Who bought the most expensive car? That doesn't do anything for you. I'm guessing you, the consumer, need to know, Mr. or Mrs. Mortgage or real estate person, what value are you going to offer me today? What value are you going to give me today that I could take away and make a decision on my real estate that's going to be true value? I don't want to hear about the top 1%. I want to hear about how you could close this transaction quicker. I want to hear about how you could save me money in this transaction. I want to hear about how you are making a better use of technology to make the transaction smoother. That's what consumers expect. That's what consumers want. I want to have these conversations because I think we get jaded and we start thinking we have to use someone because they're the top 1% or they've closed the most transactions or they've made the most money. Think about it. Next time you get a chance, look at the postings, listen to podcasts, and when you're done, ask yourself, what value was that in for me? What value was that message for me? Seriously, this is a great exercise for all of us to do. After we listen to a podcast, see an ad on Facebook, Twitter, Instagram, whatever, what value was that for me as a consumer, or was it someone trying to sell or promote themselves? That is the message I want to leave you with today, just to keep that in mind, because our job in our industry is to add more and more value. All right, I'm going to duck out today. Thank you again for checking in. Thank you for those on Facebook. The following continues to grow. Thank you for downloading the podcast. Be sure to share it with your friends, family, coworkers. Stick with us. Wednesday, it looks like Jack Russo will be back with us, and we'll be talking about the Silicon Valley, entrepreneurship, legal, and much, much more. This is Joe Kuchera with Real Estate Radio Live. Again, for more information, you can always go to reradiolive.com. Until next time, take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Subscribe to our podcast. Discover more at reradiolive.com.